Hello friends, welcome to Renko Trading System Part 2. In the last part, we have made, in the video that we have made, we have given a lot of uh, hidden puzzles so that I thought like I'll give some space for you to come up with ideas. Many of you have written to me. What have you observed? What are your thoughts on Part A to the mail ID that I had given? And I'm happy that you are participating along with the progress of the meeting that's happening. So I thought like we can't drag it further. So for the benefit of for who didn't understand the written puzzles that were in part A, so I thought like we will make a second video. It's time for the second video wherein you will understand why we were saying so many things in part A, like why were we using 50% for ATR 14, and what is the logic behind the traditional Japanese people who were using this particular system, on what basis the trading system was created, why did I use super trend. So those are the many questions that were not answered explicitly in part A. Today I thought like we will make a explanation video, and also today being a very good day, I have disclosed that the original name of Renko, what we so-called Renko, is actually Marihashi. Like HeikinAshi, this is a very popular system that the Japanese traders were using. Unfortunately, as long as the HeikinAshi, many of the old trading records have been destroyed during the World War II. So these were like whatever is left behind, and whatever has been procured by the very good veteran traders and investors of the Wall Street. We are bringing out the real secrets of the Japanese trading methodologies that were being used in the last century. So let's go into the system. To understand this particular system, you will have to travel with me all the way back to 680. So we are going back 1400 years, where this origin of this particular thing has actually started. So let's go into the presentation first. Okay, I think you can see this particular PPT. So as I said, the original name of Renko is actually Mariashi. So if you were to understand, like the literal translation of Renko comes to love. So there's no such thing called love charting. Actually, what happened is like the original name was Mariashi, and after the records have been destroyed in World War II and Japanese, most of the records were destroyed. In 1960s, when the stock market boom started in US, uh, uh, there were very good traders in US who wanted to know the real secret of how to make a profitable trade each and every time. So they were in search of this particular quest, and some came actually to the Japan to understand how these Japanese traders were more successful than they were. So they found out the answers, and they have incorporated many styles like the Henkinashi, the Renko, the Kagi charts. So all these things started flourishing only after 1960s, when the Western world explored the real secrets of the Japanese style of trading, and they made it a huge popular thing. So what happened is like in the verge of thing, like they had the problem of easy way of communicating. Even if you were to ask me, I'm not sure as to whether this is the right pronunciation to be called as the Mariashi. So there were problems, and what they found out is like this kind of style of charting was something similar to that of a brick game, which has originated during those times. So they thought like it's called a Renga or a break in the Japanese. So they started calling us the Renga chart. Okay. over the period of time, by calling Renga chart, it started being called as a Renko chart, Renko chart, Renko chart. That's how the real name come. If you were to literally translate the word Renko, it means love in Japan. So I don't think there's a correct way of calling it as a love chart to literally mean. So yeah, of course, yes, people love this particular style of chatting because it's very easy to understand, and the most easiest form of chatting that we can say is this particular form of chatting. So it's actually originated from that of popular game, or the only original game that has been originated from Japan is the Kemari. Okay, so excuse me if I'm pronouncing wrongly. I'm sure that there will be Japanese uh, traders or viewers viewing this particular video. I'm sorry if I'm pronouncing it a little different. So this is the only game that has been originated in Japan, and it was so popular. And the origination was around 600 AD, and Han period is the duration when this particular form of game was very popular. So what is it all about? You need to understand that game first. It's like it's been played by 12 people within a 6 to 7 yard rectangle or the rounded yard type. The objective is that they had a ball kind of thing, which is made out of leather or the deer skin, stuffed with so much of things, cotton or something. And the only objective is that they all the 12 players need to ensure that this ball, once kicked off, keep afloat. Okay, so it should be always in the air. This is what the objective of this particular game is. So there is no competition. It's like the ball can be passed by any people within the 12-member team, and the only objective is to keep it afloat. So it shouldn't touch the ground. That is the point of this particular game. And what happened is like Marco Polo, who came to Japan to visit Japan in somewhere around in 1500s, fell love for this particular style of playing. The only condition was that you need to keep the ball afloat in the air using only the foot, nothing else. So that is how the history says that even though it has been debatable, it is said that Marco Polo loved this kind of style of game, and that is what he carried it to the European countries, and from there the origin of the football is actually started. So it has so much of resemblance in this particular style of playing. And if you were to look at it in the style of Kemari, the player who kicks the ball each and every time, like it can be the same person or the next person, or within that 12-member team, whoever kicks that particular ball, he is called as Mariashi. Okay, so that is how this particular name has been adopted for this particular style of chatting. So Mariashi means, a literal meaning means ball in the leg. So whoever kicks the ball with that particular foot becomes the Mariashi. So football and Mariashi, how is this connected? So there are only three things that it comes when it comes to that of football. The only three things that you can find in that particular game is that the ball keep passing on the ground between the players. The second thing is like whenever a foul is made, the ball possession moves from one person to that of from one team to that of the opponent team. And the third thing that you can find in this particular game is the goals. So how do you compare this with that of modern day trading or stock market? Is something like passing on the ball is the main objective, wherein you find that not each and every second there is a foul or a goal, but each and every second, most of the seconds of that particular 90-minute game, you will see that the ball is being passed on. So that is what the key indicator for this particular thing is. When it comes to the market, it is always the trend. Okay, the fouls are compared to that of the swing highs and the lows. Though the swing highs and the lows temporarily give a temporary high or the bottom, it moves on from bulls to the bears. Okay, but it doesn't mean that there is a trend reversal. So trend reversal is actually considered to be as a goal. The swing high and the low, wherein the possession moves from the bulls to the bears or the bears to the bulls, is considered to be like a foul in the particular match. And the trend, which is the most part of this particular game, is considered as the passing among the players in the football. So this style of mariachi or the Renko chart is mainly focused on continuing riding this particular trend. That is why we are ignoring complete noises. We are completely ignoring all the swing highs and the lows. We are completely ignoring about the trend reversals or the peaks, exact peaks and the bottoms. We are concentrating more on what we are trying to ride that particular trend without any noise to the full stretch. That is how the system has been created. So you need to understand that when it comes to the mariachi or the Renko trading system, the main thing is construction of the brick. Like in the last part, we have given the considerable amount of time only for understanding or fixing that particular brick size. I have told that that forms the 80% of your all your effort. Because once you get the brick size correct, the rest of the thing is very easy. So that is where we have put in the maximum effort in part A. Now in this particular video, we are concentrating more on the trading style that was adopted conventionally by the Japanese trader. You can adopt your own style. Even like last part, we said that originally the Japanese trader were using what? They were using this like half of the average of 9 days range. So that was the initial thing that we were using to fix that particular brick size. Now we have changed it to the 50% of the ATR 14 value, the default value. Now you can keep the original system. Like some of friends who have seen the part A video has communicated to me saying that it's okay that I can compute the 9 days range and take half of it. Okay, well and good. Like if you can do that manually, because I don't know whether there's an indicator to highlight only the range. And if it is so, then it will be very easy for us to convert that into the brick size. But I'm not sure. So there are people who are taking extra or the correct conscious effort to ensure that they are sticking with the conventional practice. I'm happy for that. If you don't find it easy to compute each and every passing candles, then you can adopt that 50% of ATR 14. So 50%. Why they have been using 50% is like. So like in Kemari, like the only focus was to keep the ball in the air. So if you were to look at it, the objective of this particular mariachi is to ensure that the trend is actually in formation. Like the ball needs to be in possession with the bull or with the bears. So how do you know that it is the 50% mark wherein you say that the ball is in your court? So for the bulls, you need to ensure that by end of each and every passing that particular time frame, say if it is 10 minutes or half an hour chart or 1 day chart, whatever be it, you need to ensure that the ball is in your possession. How do you ensure that? You always keep your ball within the opponent square or wherever you have to pass on the goal. So for the bulls, the ball needs to be here in this particular box to ensure that they are staying in the trend. When it comes to the bears, the ball should actually be in this particular square to ensure that their trend is intact. So that is the reason as to why we are taking 50%. We can take any other percentage, but you can try it out. I'm saying that the minimum criteria is like 50%, and it is a discipline that these Japanese traders conventionally were using when it comes to mariachi trading system. Okay. Now let's get into the real mariachi system, the original one. The main objective of this particular mariachi system, as I said, was to stay in the trend. We are least bothered about any noises, like any swing highs or the lows, or we are least bothered about the goals or the exact top or the bottoms. The purpose of this particular charting is to stay in the trend, to ride that particular trend in full. Okay, the original methodology used was half day half 50% of the averages of 9 days range. This is what they were actually using it as a brick size. Now we have modified it to half of the ATR 14 for that particular period. The Mariachi here is actually called as the stop loss. So if you were to look at it, there are many systems, many analysts who keep saying that trial the stop loss once the trend is established, correct? So you don't know what exactly, like how do you keep trialing that particular stop loss? There are many indicators for that particular style. In those days, like the indicators were not at all developed. Only after this Western brains came to the Japanese, found out the real systems, they took it back. Only after those, like 1960s, after that period, the indicators were popularized or established also. So they were huge vacuum. So they didn't have any indicator. All that they relied was only the price chart or the actual price that was taking place in the system. So this is how it has been constructed. In olden days, the trailing stop loss or the Mariachi in this particular system is considered as the stop loss base or the stop loss brick that we are going to identify. Once you identify that, then it's very easy for you to take a trade. So what are they have a number sequence that they were using. This is the number sequence that we were speaking about even in the last part. If you were to remember that we were not explicitly saying, but I have been keep on repeating that there is a 3 factor, the 9 factor, 12. 12 actually means 12 players. So these were the numbers they were commonly or used again and again in this particular system. Today I'm explicitly saying how this particular system used to be in olden days when practiced by the original Japanese traders. Okay. So this is a factor that we are speaking about. You will understand as long as we move forward, you will understand how this is in place. So from brick 1 to 3, the Mariachi or the stop loss is actually the base of the first brick itself. Now, if you were to understand why we are speaking that there need to be a 3 brick to say that the stop loss can be even thought about revising. In the last part, I have said in one place that I keep my stop loss as the starting point. Once the 3 bricks is being constructed, I move my stop loss, then I'll forget about it and keep riding this particular trend. Okay, so that was a hidden thing that I have given. Now I'm going to explicitly say what are the things that you need to consider. Say suppose if you are taking a candle or a brick, whatever be it, with one particular candle, you are not going to judge a particular trend. For a trend to be established, you require a minimum of 2 candles. In this case, we are actually taking only 50% of the actual move or actual range of that particular time period. So what we need to do is like the minimum that we need to give is the 3 candles to ensure that a trend is established. Once the 4th candle is established, only then, which means like 4 candle means in our system, conventionally half of the range, means we are actually taking 2 candles in full to ensure that a trend is set. So unless and until the 4th candle has been established, we can't revise this particular stop loss or trial this particular stop loss upwards. That is what they have been doing. Okay. Now from brick 4 to that of 9. Okay. I'm sure that you must have seen Kaun Banega Crorepati, how becomes a millionaire show and all those things. There are kind of slabs. Okay. This system is also something of that sort, like wherein you have a slab wherein you keep moving the ladder, your base amount is fixed, something of that sort. You move the base stop loss is moved higher, and you have a different criteria. Like in the show also, like you have different options open once you move the ladder, something of that sort is being found in this particular system also. So from brick 4 to that of 9, the Mariachi base, the stop loss base is 3, but with each passing candles or each passing brick, the Mariachi or the stop loss keep moving or trailing with 1 factor. This is how we need to understand. Once I'll take you to the clear explanation, therein you'll understand how this system works. For time being, you remember this particular box. You need to take a pen and paper and note it down to ensure that you are always in line with what I'm saying for this particular system. So if you were to look at this particular thing, the movement is always 3-factor. So if you were to look at how this fixed zones are made, it's like the 3-factor. So after the first 3 candles are or bricks have been established, the trend is set. Okay, and thereafter it is a square of this particular 3 number. If you were to look this particular thing like 3 square, 3 cube, this is how this number sequence goes. And the factor is in an arithmetic progression of 1, 1, 2, 3, 4, 5. And this is how this construction actually happens. So this is a kind of thing that you will get. We'll take it to the real picture so that you'll understand how the things are moving. So this is the picture that you have seen just a while ago in the PowerPoint presentation. So basically what happens is, like in this particular thing, I have created the zones. The number sequence that we were speaking about, the 3-factor or the 3 squares and the 3 cubes, that particular number sequence has been marked in the gray. So what happens is, like the first zone is between 4 and 9. Till 3, it's a base zone. Okay, you need to understand this is the base zone wherein the trend is not set. So as long as we are not crossed into the formation of the 4th break, once we are not having a first candle in the first zone, the trade that we have taken initiated is always a risky trade, wherein the base of that particular brick, the first brick, forms the stop loss. So first, once we move into the first zone, that is between 4 and the brick number 4 to that of brick number 9, it's called the first zone. In this particular first zone, you have the leverage of taking 1 red bar at a time. Means unless and until second consecutive red bars are formed, you are not stopped out. Okay. Once you move into the next zone, that is from 10 to that of 27, you have that leverage of taking 2 red bricks. So this is a second zone, 2 red bricks. Only once you see a third red brick in this particular zone, you are stopped out. It moves on like that. So once you move into the third zone, it is something similar. Like you can see 3 red bars. 4th red bar constitutes you are stopped out. This is how the system has been created. So suppose let's take a fresh sheet to understand it much better. So this is a new sheet. I'm starting from right from the base. You have to take first 3 bricks, the minimum. Till then it's a risky trade. The 4th brick confirms that yes, there is an established trend and we have started moving here. So as long as we are not crossed into the 4th brick, the mariachi or the stop loss remains here. Once the 3rd brick is complete, you are moving your stop loss from 1 to that of 3. Okay, we need not have the 4th. Let me remind you that once this particular 3rd has been formed, you can move your stop loss from 1 to that of 3. This will be your new stop loss. The base of this particular break will be the new stop loss. Now once you have the 4th, nothing changes, your stop loss remains the same. Next, another break has been formed. There's no change in the stop loss. Another break has been formed. Means from the origination of this particular zone, this is the first break of this particular origination of this particular zone, the 4th break. From there, once you move the second candle or the second break, your stop loss or the mariachi starts moving. Now this becomes my mariachi. Another brick is formed, my mariachi moves. Another brick is formed, my mariachi moves. Means, say suppose if this particular brick is formed, the next brick is a red brick, you are not actually getting stopped out because of the brick base of this particular sixth candle is your stop loss. You have the leverage. Okay. Now let's continue. Now, once this particular ninth brick has been formed, this is the zone, entrance to the next zone. Your actual move, mariachi moves all the way from whatever place that it was to this particular place immediately. Means I am moving at a 2 speed once the zone doors are open. The next, let us continue. There is no change in mariachi or the stop loss. Remember, we are entering into the second zone of this particular series, and this second zone requires a movement of leeway of 2 red bricks in this particular style. So let us move ahead. Now, in this particular zone, like last time we have said that unless you are having the third brick from the previous door, the third brick initiates your stop loss. In this particular system, once you are getting the fourth brick, only then your actual mariachi moves, actually, the stop loss moves. So in this particular case, you need to wait for 3 green bars to move your mariachi from the door to that of the next brick. In this particular zone, you have to wait for actual 4 bars to start moving your mariachi. Now let us continue. Now the logic is very simple. In this particular zone, you have the leverage of two red bars. Say suppose if 2 red bars have been formed, and instead of moving your stop loss from here to here, you would have actually stopped out. So the logic is always same. In the first zone, should be the moment of the stop loss or the mariachi starts only after the formation of the 6th candle, or right from the base I am saying the 6th candle, or from the 3rd candle from the door. In this particular zone, we need to wait actually for the 4th bar to start seeing your stop loss moving. In effect, the only logic is that in this particular zone of the first zone, you actually have the leeway of 1 red bar. In this particular zone, you have the leeway of seeing 2 red bars. And the system moves on and on continuously. Once you move, say suppose I'm continuing from here. Say suppose once you have started, you have touched this particular 27th bar. This is your new move, mariachi or the stop loss. From there, it start moving. In this particular zone, this is the 3rd zone, means you have the leeway of 3 red bars that can be formed. So what needs to be done? The first zone that we were speaking about, you would have to wait for 3 candles, 3 bricks. In the second, we have to wait for 4 bricks. In this particular, you have to wait for 5 to start moving your stop loss or the mariachi. 1, 2, 3, 4, 5. Now you have started moving. Now you'll start moving the mariachi from the door to that of the next brick. The logic is very simple. If we were to see red bars thrice here you're not stopped out, because as per this particular system, in this particular third zone, 3 red bars are allowed. As long as the fourth red bar is not made, the system says the trend is getting continuously on the upside. The trend is intact, in fact. That is the right way to use. So this is how the system moves. Okay. Now I'm going back to this particular thing. This is a reference chart. You will have to create your own thing. You need to practice it, take the boxes to a different level. Keep in mind that these are the zones that the traditionally people were using. And with each passing zone, in the first zone, this is called the first zone. In this particular first zone, 1 red bars is allowed. That is from 4th to that of 8th. From 10th to that of 27. That is the second zone, 2 red bars are allowed. In the third zone, that is about 27 to that of 81. Third zone, 3 red bars are allowed. So this system keeps moving on. I have not seen a chart which have more than 81 bars. This is a system that keeps moving across. And people used to ask me, to be very honest, people used to ask me, this is a little tricky, like how do I keep a track of this again and again? So with a lot of research, like how we have arrived at ATR 14 ka 50%, we have come across this particular system. I found that super trend in the second zone, super trend values tend to works good. In the third zone, once the price enters into the third zone, super trend 10-3 is closely aligned to that of this particular system. Visual observation is more than enough, but however, if people are looking out for an indicator which closely resembles to that of the manual system that the Japanese traders were using, you can very well use this particular super trend. The values are very simple: 10 for the second zone, 10-2 multiplier effect, 10-3 for the third zone, and for the fourth zone, 10-4, and you can keep revising it. The request is very simple. Last part, we have made it very clear that after the formation of the 7th period candle or the brick, you need to go back and check whether there is any change in this particular ATR 14, and you need to revise that brick size. Now, why did I say the 7th after forming the candle is actually the door of that particular zone? Getting it? That is the logic. So which means like first 3 candles, you are actually leaving it completely because it's a risky thing. Unless and until the 4th is solidly formed, you are not confirming that particular trend. Once the 4th is formed, moving all the way to 9th, 9th is the door. 9 minus that of 2, which was previous zone or the base zone, base 0. You are revising after the 7th break. You are actually revising this particular ATR 14 value if there is any major change. Don't change unnecessarily, like for a fraction of the points. It's not recommended. And with the passing of after the next zone, that is on the 27th candle, after the formation of the 27th candle, again you go back and check the ATR value. Then if required, make any changes in the traditional brick size value. Otherwise, you can continue writing this particular system with the said formula. So formula is the key. Practice it again and again. You will find it that you are actually adjusting to this particular system wherein you don't require any kind of indicator. Over a period of time, you will become an expert. Like, get into the zone, find out, redefine it. Very simple. Keep in mind the first zone from 0 to 3, the first 3 candles are base zones wherein you can't find any red candle. If there is a red candle, you are stopped out immediately. First zone where the actual trend is being established, you have the leeway of 1 red brick. Second zone, you have the leeway of 2 red brick. Third zone, you have the leeway of 3 red brick. Keep that in mind. and start progressing. Whenever you find a gate, go and find out any changes in ATR values so that you can adjust this particular brick size and keep riding the trend. This is how the conventional Japanese Marihashi traders were using this particular system. Now this is again not complete. This is part 2 of this particular Renko trading system or the Marihashi trading system. We have one more video part which will be coming in a week's time. In that particular thing, we will keep you highlighted how to identify which are the trending zone and which are the non-trending zone. We are using one indicator to find out where are the trending zones and where are the non-trending zones or the trading zones. Because what happens is like this brick system or this particular Marihashi system really works good once you know where to use and where not to use. Okay, so this is the end of this particular part 2 video. Hope you have enjoyed this. Keep practicing it with the old traditional style if possible. If you can put in little effort into this particular system, it can do wonders. Thank you so much for watching this video and stay connected for the next part that is going to come up soon. Thank you so much.